Boy, crikey, mate, this market crash is getting out of control. Oh my goodness, everyone, the stock market crash is just getting worse. Not only the stock market is crashing, but now Bitcoin is crashing. And at the time of recording this, Bitcoin has broken the $50,000 support level and it is down almost 25%. The S&P is down, the NASDAQ is down, the Dow Jones is down, even Dogecoin is down. That's how you know we're in real trouble. The stock market decline is playing out just like I've been saying, but everyone was like, no. Papa Jerome Powell will keep bailing out the stock market forever. Every time it drops just 0.5%, he'll be there with his money printer gun and all will be well. Well, unfortunately, the time has come. Breaking fundamentals can only go on for so long. The stock market can only get so overvalued. The bubble can only go so high enough before everyone knows, okay, things are getting crazy. The stock market is overvalued. It's time to take some profits on the table because remember, taxes are due next month. So there's been a lot of people that got in the stock market in March, April, May that made big gains that now may want to capitalize on those gains, especially with the new proposal of increasing capital gains tax from 20% to 43.6%, which I'll get into in a minute. And if you think this stock market and cryptocurrency market crash is bad, you ain't seen nothing yet. What you have to know is the stock market, the housing market, cryptocurrency market, it's not fully correlated with the economy. Just like what happened last year in 2020 when we had the worst recession since the Great Depression or the steepest decline in GDP, the stock market, housing market and crypto market boomed because of cheap money and low interest rates. And that's what's really fueling asset prices at the moment. So even though now unemployment's dropping, companies are earning more money, the economy is reopening, GDP is rising, everything in the economy seems great, well, that's actually bad because then that means the money printers are going to have to start turning off, and that means interest rates are going to lift much sooner than all central banks have been saying, and like I've been saying, but people are like, no, it's not going to happen. Well, have a listen to this. Canada's central bank is now tapering its quantitative easing program, and also it's brought forward its forecasts that it will lift interest rates much sooner than it initially said of 2023. It's now saying they're going to start lifting interest rates next year. And it's just a matter of time before this happens in the US and in Australia as well. Okay, so let's get into exactly why the stock market is crashing right now, why the Bitcoin market is crashing, why the cryptocurrency market is crashing, and what I think is going to happen in the future. Okay, first things first, the terrible news that sent the stock market plummeting and made all the people in Wall Street soil their diapers. Okay, so this is huge for pretty much investing as a whole and investing in every single asset class, but more specifically the stock market and the cryptocurrency market. Joe Biden is eyeing increasing the capital gains tax from 20% to 39.6%, almost doubling it. And guys, if this gets through, it's just a proposal now, but if it does get through, you better believe the stock market and cryptocurrency market is going to continue to plummet. So let's get into exactly what this proposal is saying. So what they're proposing is people earning over $1 million would have to pay a 39.6% capital gains tax plus Obamacare levy. Now this won't directly affect many of you watching, and it doesn't affect me because I'm not in this tax bracket, far from it, but it could affect you if you hold stocks, crypto, maybe even precious metals, because then that means a lot of the people that are earning this amount of money and a lot of the hedge funds, they're going to be selling off, and that's going to affect us, the small retail investors. And for all those in New York and California, this means you could be taxed over 50%. Imagine if you worked your butt off and you made some really sick gains, and for example, you made $1 million, you're like, yeah, finally a millionaire. And then the government comes and takes half of it and says, thank you very much. So the stock market reacted to this pretty strongly. The Dow Jones Industrial Average was down 0.94%. Same with the NASDAQ, and the S&P 500 was down 0.92%. And as of recording this, Bitcoin has fallen down to $48,000 after hitting a high of $64,000 US, that is. So that means Bitcoin, as of recording this, is down around 25%. Now, for all those that have been investing in Bitcoin, the cryptocurrency market, this is pretty normal. But what I'm looking for and what I'm interested in is when is the next bear market going to hit? Because even though corrections and crashes like this are normal for Bitcoin, that was when the Bitcoin market cap was much lower. But now that it's over $1 trillion, a correction like this is very significant. And if you think these tax rates are crazy, you ain't seen nothing. In 1944, the highest tax rate went over 90%. Imagine what would happen to the stock market if we went back to a 60 or 75% tax rate. That would be absolutely catastrophic. So even though this may seem outrageous, over the historic chart since 1913, we have seen much higher tax brackets than this. And a question you have to ask yourself is, will this work? Will this give the government funding that they need to fix all the issues by taxing the rich and by increasing taxes for everyone? Well, for myself, throughout studying history, higher taxes never work. You can tax a population 100%, but if you don't invest the money properly, and if you keep spending more than you're earning, if you keep on taking more debt, no matter how much you tax the people, you're never going to have enough. And what really annoys me and what really is so crazy about this financial system is they print money that doesn't exist. They then charge you interest on that money. They then tax you on that money that they created. And then they use that to buy real tangible assets like real estate, land, resources, and people's labor. Really, when you think of it with a common sense approach, it sounds like a Ponzi scheme. And what was absolutely laughable was last year when the debt was skyrocketing, they were saying, look guys, don't worry, we're not going to hike taxes. The debt doesn't matter anymore. We can just keep on taking on as much debt as we want. It's not going to affect inflation and we're not going to have to increase taxes. Well, how quickly do times change? And really, they just lied to the people's face again and again. I could see this coming. Everyone thought they had a free lunch, but now not only the rich taxes are going to increase, it's just a matter of time before the average Joe taxes start increasing as well. And what the rich can do, they can just find loopholes and offsets to lower their marginal tax rate. Or also what they can do is instead of selling their assets, they can borrow against their assets. For example, real estate, they can borrow against their real estate refinance and only pay 4% interest instead of paying these 40% marginal tax rates. Same with their stock portfolios. They can borrow against their stock portfolios and use debt instead of paying taxes. They can offshore their companies. There's so many tax loopholes for the rich, but there isn't for the poor and for the working class. So while this may sound great that they're taxing the rich, really at the end of the day, it may punish those that are trying to build wealth and increase their living standards right now by working hard and investing their disposable income. And really what grinds my gears and what should grind your gears is all your hard-earned tax money is going to paying off your neighbor's mortgage or going off to pay off these other investors' mortgages through these forbearance programs, because they're saying, look, they can just stop paying forever. We won't have to increase taxes. But look, it's happening now. So that means some people didn't even need the forbearance. They just took it because they saw that as a free lunch and a way they don't have to pay their mortgage. And also people got stimulus that didn't need stimulus. Well, now you, the prudent saver or the person that was wise with your money, you're going to have to pay for those people's stimulus and pay for your neighbor's mortgage that took forbearance that didn't need it. But again, going back to the markets, this is exactly what I've been saying. The stock market was at all-time highs, but the economy still hasn't fully recovered. The illness is still getting worse around the world. And the Warren Buffett indicator was over 200%. PE ratios have never been high since 2000, 2007. Margin debt was at all-time highs, but now what I've been saying is we're having a great deleveraging. And really the market's always forward-looking and markets like certainty. But right now they have a lot of uncertainty with these new tax proposals, with inflation, how high is it going to get and how high interest rates going to go. And with all this uncertainty, the stock market sells off first and they wait for answers later. And what normally happens in the cryptocurrency markets is there's a halving event, and then normally historically 18 months after that halving event we enter a bear market. So the last halving event was in May 2020 last year. So that means we should be entering into a bear market anywhere between September and November this year. But the thing is, now institutions are in the Bitcoin market. So all the cycles that have happened before, it may be different this time. Now I know that's famous last words, but a lot more retail investors and institutions are more educated about the cryptocurrency market. And so if they know that the bear market is going to happen in September, well then they're going to try sell off or dollar cost average out of the market before September. And then there may be other institutions that try to beat those institutions, or other retail investors try to beat other retail investors. And so while these crashes are normal in Bitcoin, you can't become complacent because a bear market will be coming sometime this year. And what I've been doing actually since Bitcoin hit 60,000 is I've been slowly dollar cost averaging out, and I'll still keep a core holding in my portfolio for long-term investing. Now there's no guarantee that this will be passed, and a lot of investors are saying it's highly unlikely it'll be passed. Biden's saying it is up for negotiation, so maybe he's just trying to negotiate from a higher marginal tax rate, and who knows, much more likely I think would be a 25% capital gains tax. But it is possible that it does get passed, because there is more and more pressure to tax the rich and to tax the wealthy with the huge amounts of inequality that's getting out of control and that we have in the US and around the Western world right now. And I made a video on commodities yesterday, and commodities overall, not all commodities, but majority of commodities have actually held up well. And like I said in the last video, I think commodities are undervalued. When you look at the historic chart going over the past 30 years, some commodities are still below their prices in the 90s. So that's what I'm going to be investing in, because the stock market I think is overvalued, the housing market is overvalued, and we've just had a crazy run up in Bitcoin. So I think it is very possible that we could see a 20 to 30% decline in the stock market this year if this does get passed. And if this does get passed, I do think we'll see an even greater decline in Bitcoin and the cryptocurrency market of anywhere between 40 and 50%. Guys, you always have to study the cycles and study history, because if you don't study and learn from history, you're bound to repeat it. And throughout all my research and studying cycles and studying history, this is one of the craziest bubbles I've ever seen. People are so complacent. We've had euphoria in the markets. We've had crazy amounts of leverage and risk. But now I do think we're at the turning point. And not financial advice, but you may want to start building some cash positions on the side in order to take advantage of these dips. For all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you up to date with the latest finance, housing market, stock market, and economic news. If you're interested, I'll have a link in the comment section where you can get 2 free stocks with Webull valued up to $1,600 for my Australian viewers wanting to invest in the US. I'll leave a link in the description for Stake. You can get a free stock in Nike, GoPro, or Dropbox. Thanks again for watching. If you're bored, I'll put up some other videos here. I'll see you there.